Our In Conversation program is undertaken each fortnight to keep South Australians and industry stakeholders engaged and informed as we make our way through COVID-19 and into recovery. Hi to everyone and welcome to another session on today, Wednesday, the 2nd of December. Wow. I'm today's host, Kathy Ramsey, the Partnerships Manager at the Tourism Industry Council, the peak industry body. A little bit of housekeeping before we kick off. We just asked everybody, you can feel free to have your videos on. We love to see as many faces as we can, but feel free to just, if we ask you to mute your microphone, we'll use the chat function as we work through the session. So put any of your questions in the chat function and then I can ask you to come off of mute and engage directly with our friends from Gallagher today. Today we are joined by Martyn from Gallagher. Martyn has 26 years commercial and corporate industry insurance broking experience and has successfully worked with a diverse range of clients across multiple industry sectors, providing sound insurance advice. His coalface experience and practical approach has helped him be a trusted advisor to many SME and corporate businesses he works with. Hi, Martyn.
Hi, Kathy. Thank you very much, and thank you to the Tourism Industry Council for allowing us to do the presentation. So we'll do a short presentation today on why our premium's increasing, which is quite topical at the moment in the current insurance industry and also the tourism, hospitality and leisure industry. But myself will be presenting along with Hugh Thomas. Now, Hugh Thomas is our Gallagher State Manager in Adelaide. He has a wealth of experience from underwriting and also insurance broking. He's worked in both Australia and the UK. Hugh worked for many years in Lloyd's of London, so can provide an insight as to the actual reinsurance and the insurance costs and things behind what drives your premiums, what drives the market. He is Welsh, so excuse the accent, but he loves AFL footy, so feel free to ask him any questions. So, Hugh.
Oh, you've got a win with us there, Hugh. Yeah. Thanks for joining us today, Hugh.
Hi, morning everyone. So thanks for giving us the opportunity to speak to you all. Yeah, why are insurance premiums rising is a question that we get asked by all of our clients and has been for the last 18 months. So at the moment, we're in the middle of the toughest market conditions that we've experienced for a generation. Usually we do have market cycles, things do turn. However, they don't usually go on for this long. We're still looking at a couple of years of pain. So this presentation just aims to give you a bit of the science behind how we got to this point, and more importantly, what you can do to actually survive this market and achieve the best results possible.
Oh, great. Thanks, Hugh. We really appreciate you guys coming on board. You know, we understand insurance. You probably get it all the time. It's not a sexy topic. It's fairly dry, but, you know, it is important as it affects us all on a personal level, but also a business level. But what we've probably learned more than anything in the last 18 months, it's about future-proofing our business and protecting our assets. For everybody today, Gallagher's is the insurance partner for the Tourism Industry Council. So we're really pleased to connect you with Hugh and Martyn today. They've been involved with helping out and familiar with tourism businesses across the state. And yeah, feel free to reach out to them as we move through today's session. Like we said, any questions, pop them on the chat function and we'll allow you to connect with Hugh and Martyn and unpick their brains and use their wealth of knowledge to your advantage today. So let's go ahead, Hugh, let's kick this off.
No problem. So I'm hoping that this is going to work, and then also hopefully you'll lose the view up my nose you've currently got. So
Hugh's going to share us a presentation today, which will help us unpack more about our insurance premiums.
Okay.
That's perfect. I've got that all on my view there, Hughes. That's great.
Excellent. Okay, so this is just a quick overview of how the market works, really. So in insurance, we talk about hard market and soft market. So hard market being when it's difficult to get cover and when premiums are expensive. So to make it a bit more user-friendly, we've turned it by seller's market. So we're definitely in a seller's market. So just to move briefly around the graphic, starting top right. When insurers are seeing a decrease in claims, so they're not paying out so much, they haven't got so many losses, it means that they increase their cash reserves. So increased cash reserves means that they're in a better position. They can pass that on in terms of lower premiums to their clients. As soon as they start passing on the lower premiums, they realize, actually, we like keeping business, but we like winning business even more. So they then start going out on the hunt and making their underwriting guidelines easier because they're fighting for business. That's great for policyholders, means that there's competition in the market. And with cheap premiums and plenty of insurers out there, it's a good time to be operating. And that's kind of where we were for about 10, 15 years, up until about 18 months ago. When insurers start writing business that falls outside of their guidelines, it means that they then have losses. So more losses means that their cash position decreases. The easiest way to improve their cash flow is to pass those costs on to you guys, increase their premiums, and also they then come under pressure to write a cleaner book. So their bosses want to know that they're not going to be faced with so many losses. The best way to do that is to increase their discipline around their underwriting. So it makes it much harder for them to write business, competition decreases, and that's where we are at the moment. We're really seeing insurers are putting up barriers to writing business, and I think a lot of your members would have seen that in terms of difficulties in getting cover, or where they have seen restrictions and certainly increases in premium.
Absolutely, and I think in that difficulties of getting cover, Hugh, it's unique because what makes up the tourism industry is many unique service providers, from shark cage divers to, like you would understand, from dealing with a lot of people in the sector across the industry. It's just a really big, diverse industry, and the type of operations which can make it challenging, let alone the circumstances of the last 18 to 24 months as well.
Yeah, I think that Marty, you'd have seen firsthand, wouldn't you, in the tourism industry with the clients that you deal with, that this is definitely what we're seeing.
Yeah, absolutely. We've sort of seen across all industries, it's not just adventure-based, it's not hospitality, it's restaurants, it's across all industries and across all multidisciplines of different insurances, whether it be directors insurance, property insurance, liability insurance, machinery breakdown, etc., etc. So it's not just one particular product or one particular industry. It's a blanket across all industries. But the tourism sector has been impacted a little bit, especially around the caravan parks. But we'll cover that off a little bit later in our presentation as well.
Sure. Great, okay. Thanks.
So won't dwell too much here because no one likes to read too many graphs when they're doing sitting through a presentation. But the important trends to note is that the underwriting result, top left, is down. So that's the profitability that insurers are getting from actually writing policies. The other way that insurers make money is through investment. So on the right there, top right, you'll see investment income is way down. So it means that if they're not making money on their insurance side and they're not making money on their investments, then they're really struggling. Claims have certainly increased. We've seen a lot more natural catastrophe losses. So as you can see, the last 5 years, they've really gone through the roof. And you add all those three together and you get the net profit. being way down. So that this presentation was put together at the start of the year. APRA actually released some figures this week for the industry. So for insurers for the year to date, their profit has fallen 73%. Their underwriting profits fallen by 16%, and claims have increased by 11%. And investment income's reduced by 68%. So these figures that we're seeing for the 10-year picture, this is actually probably the worst year. Even this is on top of that. So when we're talking next year and we refresh these graphs, the numbers will be even worse.
Wow. It's interesting, you know, you talk about with particularly claims increasing, and I hope I'm not taking you off course here, Hugh, but, you know, natural disasters, and it kind of opens up potentially a can of worms, because that has increased a lot over the last 5 to 10 years in Australia, and it's probably linked to a lot of those insurance claims. But it does open up a interesting point about what people think they're covered for and what they are actually covered for. You know, is this starting to get a bit better defined?
I think that so we had a Royal Commission last year, or the year before, in insurance, and there was a lot of attention placed on clarity of information that was being given by insurers and brokers. Look, I'd love to say that it's a problem that's been fixed, but really, the information that you have about your policy is all relying on how good the information that you've been given by your broker. Obviously, policyholders are experts in what they do. They've got 1,000 things to do every day running their business. So, like with the tax advice you get and the legal advice you get, you can only rely on the experts that you're actually going to give you advice around you know, making sure your business is protected. So I think that, you know, we'll go further in this presentation about the fact that what we want to encourage everyone to do is really put their brokers under some pressure about asking some real questions about what they are covered for and what they could be.
Well, yeah, I agree. It's about that relationship. I like your comparison there. We invest in an accountant for a reason, and you invest. It's an investment with your broker, and you have to have a really honest and solid relationship, but be able to ask those hard-hitting questions as well.
Absolutely, yeah. I won't trample on the presentation too much, but yeah, we'll move on to some specifics that we think is really important for people to focus on.
Right, I appreciate that. Thank you.
No problem. So I'm hoping this video will work. So natural catastrophes are, as you say, really become prevalent in the last few years. So there's obviously a global warming side that we won't necessarily go into, as it can be a bit controversial. But there's no doubt that we're seeing an increase in natural catastrophes in Australia and around the world. So when there's large catastrophic losses, it's disastrous for insurers because it affects a large number of people all at once. Obviously, a fire in one house is unfortunate. A bushfire can be absolutely catastrophic. So insurers know that natural catastrophes are occurring. They're not sure how bad they'll be until they actually hit. And so they have to just try and build up reserves to cover for them. But this was 1 week in January of this year, just in Australia. Crossing fingers, it's going to work. Nope, doesn't want to. All right. So, Okay, so as you can see, it's always interesting to see what YouTube's going to throw up as the next suggested video. Let's see, it wasn't too bad.
I think it's a great perspective there, Hugh. Wow, it brings you back, doesn't it? And really puts a perspective on what can happen in Australia in simply a week.
And like this, it's important to know, this, all of those are separate events that insurers have to try and make sure that they've worked into their underwriting, and that means that essentially they need to buy reinsurance. They can't build up enough in their coffers to ensure that they can cover a large-scale bushfire events like we saw earlier in the year. So reinsurance, I'm sure you all know what reinsurance is, but for anyone who doesn't want to put their hand up to say they don't, it's essentially insurers just buying insurance. It's largely driven by natural catastrophes, because if we're just talking about normal events, small electrical fires, water damage, insurers can actually make allowance for that, and they can build up enough in their coffers. So reinsurance is for the big events, and the more big events happen, the more insurers have to buy reinsurance, and unfortunately those costs have to be passed on. So the way of looking at reinsurance really is that if you're a manufacturer and one of your suppliers of a component that you put in one of your machines increases the price, you obviously then have to increase the price that you're passing on to your ultimate consumer. Okay, so what exactly do insurers spend the money that you generously give them? So this is a breakdown that's based on property damage. So your material damage, your business packs, or your industrial special risks policies. So this is based on information that was provided by Vero Insurance, who some of you may be insured with. So this shows the difference between the buyer's market, so when things are soft, and the seller's market, where we are now. So you'll see there's a couple of key differences, and they're all based around losses. They're all based around catastrophic losses specifically. So where we are at the moment, so the reinsurance cost is the big one that's jumped up. So because they have to assume that they could be faced with hail, with fires, with dust storms, they have to buy more reinsurance. So the cost goes up. They have to pass that on. Policy and claims admin costs. So obviously, the more claims you have, the more people you need in your call centres to answer the phones when people call up to say that they've had a loss. The more assessors that they need out on the road to go and meet with policyholders who've suffered a claim. So that increases slightly as well. The other costs are stable, other than the natural peril losses, as you can see down the bottom. So that's money that they keep in reserve that's outside of the reinsurance cost. So as you can see, this is the way that things are sitting at the moment. Insurers are looking at a margin of minus $5 for every 100 that they collect. And obviously no business can sustain that. So the only way of really righting that wrong is to increase the premium further in order to balance that off. So the unfortunate thing for you guys as policyholders is that you can't affect any of those figures whatsoever, because they're all driven by the natural peril losses, other than this one down the bottom, the working losses. So your working losses are what insurers expect to happen at a business. So theft, small fires, burst pipes, accidental damage. So what's called attritional losses, the things that happen every day. So it's based on, and insurers can only base this on what they typically see for individual industries. So historical losses. So what's gone before gives them a picture of what's going to come in the future. The challenge that you've got is to change their thinking so that they see you as being different from the rest of your peers in the industry. So, okay, so this is the really important bit that we want to get across. So, how can you actually thrive in the market that we're currently faced with? So, the first thing is to really understand what it is that the insurers have as an impression of your industry. So if you're a pub, what is it that they look at and consider that are the important things when they're actually setting their rates? So we've got a note there saying courtesy of Gallagher. Gallagher actually produce reports for a variety of industries, which actually which provide a rating for how insurers see the exposures that you have as an industry. So we're very happy to provide individual reports for any members. Please get in touch, and Martyn would be happy to get something in place for you. And yeah, we find it's an invaluable tool for people in being able to make sure that they're really being able to sell their business in the most beneficial light at the moment. So, okay, don't hide away from the elephants, Marty. Do you want to?
Sure, thanks, Hugh. So when we say, don't hide away from the elephants, don't be afraid to disclose. And what we talk as brokers is say to our clients, what's the worst thing that can happen to your business? What keeps you up at night? We need to make full disclosures to the insurer so then they can address your risks. We find a lot of issues in those bushfires and those particular claims is where clients or customers fail to disclose material facts that are relevant to the risk. And that's where you see insurers go, well, we're not going to decide to pay that claim, or we're going to reduce the cost of our claim because had we known X, Y, Z, we wouldn't have insured you, or we wouldn't have covered that particular item. So we say full disclosure, but also from that perspective is, yes, every business has its risk. Some, for example, if we look at a shark dive and we say, what's the worst thing that could happen would be, well, we fail to lock the cage and a shark gets in and, kills one of our customers. So the insurer would say, okay, we know that can happen, but how do you manage your risk? What are your risk management strategies to manage that risk? So that's when we talk about disclosure, disclose. Don't hide away from the fact that, your fireworks factory may explode at any time, or, you might accidentally kill someone on a leisure ride, etc. Don't be afraid to talk about the worst risk that's possible, because if the insurer is prepared and they understand your risk and they understand how you manage your risk, then you're more likely to get a better outcome when it comes to insurance. So the other thing was to ask to meet your underwriters. How many clients have you met your underwriters? Have you actually asked them to come out and have a look at your operation? We're seeing a lot of virtual surveys and a lot of virtual meetings where we can say, right, walk us around, show us your equipment, show us your risk management. How do you manage risk? Explain to the client that you're just not a normal operator, a normal ride operator. You're not just a normal caravan park. You have other risk management strategies other than just transferring your risk straight to the insurer and saying, well, I pay my premium, I accept my insurer to cover it. Well, the insurers want to know, how are you going to manage your risk? Other than insurance, how are you making sure that claims don't occur? So we always welcome the opportunity to meet your insurers. And this is critical in this current hard market, is start early. You must start your process a lot early, whether you're a cafe, coffee shop, motorsport park, etc. You must start your process early. We're seeing lots of insurers decline risks, apply exclusions to policies. We've seen situations where they're sort of saying, we're prepared to cover you, but we're not going to cover fire, and all sorts of things. So we're saying start the process early so there's no hidden surprises. And if there are surprises that come from your insurer, you have time to consult, risk manage, organise strategies, work out how you're going to transfer that risk, and restructure your program, and allows you time and you're not acting under a panic pressure.
That's some good advice there, Martyn. And talking about starting early, like it's obviously not waiting for your renewal notice to come in the post or via email. What would be your recommended lead time if, if my insurance policy is generally up in February and, perhaps 4 weeks out, I get my renewal notice? When would you anticipate people to start really going, let's not wait for that notice, let's start thinking about this now? Because you and Hugh have shared the market's not looking good and there is going to be some, things impacting it. What would be your suggested lead time?
Sure, I would say anywhere from 10 to 12 weeks.
Yep.
And of course, what we start as Gallagher, as insurance brokers, we call our clients and say, hey, look, we'd like to have a pre-renewal meeting with you, or a pre-renewal conversation, and say, look, we're seeing this in the market. We contact the insurers and say, are there going to be any issues? But unfortunately, that's the broker of the advice model. If you're direct with an insurer, you'll just get it in the post. So we strongly suggest that you look at your due date and think, right, let's work back 10 weeks or at least 12 weeks, and let's start the process a lot earlier.
Yeah, that's fabulous. And even Martyn has touched on, don't hide away from the elephants, and it's about risk management. Just a great opportunity to share with you guys. Many of you are Quality Tourism accredited. It's about best business practice. We've got a whole module in there on risk management and some great resources there for you. And then there's also a module on environmental stuff, environmental area as well. So it's just important for you guys to not set and forget, and a timely opportunity to look at that when you're going through those conversations with your broker. But we've got a bank of resources. So if you're not sure where to start, refer back to your Quality Tourism accreditation, jump in the portal, and there's some resources there definitely to help you start that process of, what risk management policies I've even got in place.
That's very good advice. And if we're asked to have a look at your insurance, would like to meet with you, if you've got any questions, we're more than happy to share our risk management strategies and advice as well with your members as well.
Yeah, fabulous. Thanks for that.
Buy less insurance. This is a question we get quite a lot. So it's assessing your needs. Do I really need the glass cover? Do I really need machinery breakdown? Do I have a higher excess? These are the questions that you need to challenge yourself and think, okay, do I really need, where shall I spend my money basically? Where's the best to spend the money? What's my major risk? What's going to shut the doors? It might be a large liability claim for a death of a person or a severely injured child, as opposed to spending a lot of money on machinery breakdown when you've got air conditioners or fridges that may break down. So we talk about the strategy we have, again, is this risk transfer. You transfer it to the insurer, transfer it to yourself. This is what we're talking about, is analyse your whole insurance. And if you come through to us or an insurance broker, this is all part of the process. This is the advice we'll give you around, hey, let's have a look at this. Do you want more insurance here? Do you want less insurance there? Because we know that businesses have to work to a budget, and there's no endless supply of funds. So it's about being smart on your insurance spend, that you're comfortable, and then you can sleep at night knowing that if something does occur, you're insured or you've managed that risk. Become your own insurer. Again, this is self-insurance. You might have an excess of $250. You might think, well, I'll have a higher excess of $10,000 and I'll manage those risks under $10,000. Again, this comes back to the advice model where we would consult with the clients and say, what is your cash flow? What does your balance sheet look like? Can you afford to have a higher excess to reduce your insurance premium costs? Again, this is what we're talking about, managing your risk. Instead of transferring the risk to an insurer, can you accept the risk and manage it yourself internally? Or, again, do you say, we buy insurance, this is what we're concerned. So again, this comes back to the advice, and in consultation with the clients and the members, we try and strike that happy medium where they're comfortable with the risk. And when we say be a contract killer, one of the things that we do see a lot of is where people recklessly sign contracts not knowing what they've agreed to. Because under all policies of insurance, if you assumed cover or assume responsibility under a contract, you can void your insurance policy. So we always say before you sign any contract, obviously get your solicitor to look over it from normal business practices and get your insurance broker to look over it from an insurance implication. Because we see some nasty clauses like you'll indemnify us for whatsoever clause. And you think, well, hang on, we can't agree to that. But some people do sign it, unfortunately. So we say, make sure you're aware of any contracts you're signing into services, supplies, terms and conditions to ensure that you're not assuming more responsibility than you otherwise would be exposed to at common law. So that we can't stress that enough, because there is specific exclusions in all insurance policies to do with assuming responsibility under contract.
Thanks, Martyn. That's some great advice, and really, this is a really great opportunity, and it makes it so for me, it's a no-brainer, but that relationship with your broker is so vitally important to really help dig deep into those questions to protect your business, to protect your assets.
Correct.
And, in particularly what we've learned over in the last 18 months or so, but that it's all about your relationships, having a really good trusted relationship and getting that sound advice from your broker, and let insurance not be a set and forget thing.
That's right. And look, there's some horrible statistics that have come out of the bushfires and the previous bushfires in Victoria, that 70% of the homeowners that lost their homes were underinsured. Because if you have an advice model, this is important to understand, is that if you go through an insurer directly like Allianz or Budget Direct or Amy, they don't have to give you advice, because what they say is, we'll insure your building, you need to read the contract of insurance or the product disclosure statement. If you come through an insurance broker, we have to advise you on that product. So it's the same as when you see your lawyer, you get advice. If you buy a product off the shelf from Coles or Allianz online, etc., it's up to you to read the policy wording and find out what you're insured for. So this is the difference between going through to an insurer or a broker. It's the broker's responsibility to give you the advice around the product that you're purchasing.
Yeah. Oh, and yeah, so vitally important, Martyn. And we could read it, but it's about understanding it too. Correct. As well. And you guys are the specialists in that field. I think under insurance, wow, that's been so significantly highlighted the past couple of years because of the circumstances that have impacted our industry. And I just think it's pretty easy to fall victim to, simply looking at your insurance renewal notice year on year, accepting the marginal increases and then paying it. Fast forward 10 years and the sum insured hasn't actually changed, and consequently people are finding themselves in some pretty horrible situations, aren't they?
Absolutely. We've seen some very sad situations where people have got 2 mortgages but 1 house. Also, the situation is that your house may have been built in the 1980s, but if you suffer a total loss, you must build it to the 2020 specifications, which is significantly a higher cost than what it previously was built. So you need to allow that in your sum insured. And again, when you're building your sum insured for home insurance, as a classic example, you need to factor in alternative accommodation. So while they're rebuilding your house, it might take 6 to 7 to 8 months. You need to allow that you could be spending $500-600 on rent or alternative accommodation for your family. So it's all those little things. And again, that's where the advice model comes back, as we will discuss that with the clients. We have a duty under the Insurance Contracts Act and the Agents and Brokers Act legislation to provide that correct and sound advice. And if we don't, then we're not doing our job as professionals.
Yeah, no, thanks. Martyn, a question's just come up from Annie, and it's a really good question. Would you prefer to answer that now, or would you like me to hold off to the end? Because I don't want to take you off course.
No, look, what I'll do is I've only got a couple of little more extra points to go. Then I'll address that question, if that's okay, Annie.
Annie, if you don't mind holding tight, and we'll get Martyn to address that at the end. Thanks, great question.
That's right. So what we say, be different, disruptive and proud of it. And we say you need to challenge your insurer or your insurance broker. So some of the, we'll provide this to Kathy to share with the members, but Some of the questions that we would suggest that you put your broker or your insurer under pressure is, how early will you commence my renewal negotiation with the insurers? What is the current attitude to my industry in the insurance market at the moment? What are the things about my business that insurers would consider to be high risk? And what could I be doing to address those exposures? Am I able to meet the insurers? Would a higher excess be a good option for me? Does my insurance comply with any contracts I have in place? And what are you doing to make me look different in the insurance market? So how are you representing my business to the insurance market? So how are you selling my business to the insurance market, ensure I get the best cover for the best price? So they're the takeaways that we would say to put your insurer or your insurance broker under pressure, is to provide those questions and challenge their thinking, challenge their way of underwriting, make them think differently, make the broker come up with new initiatives. This is part of the process. Make it disruptive. Just don't go with the flow and get the renewal and pay it and move on. Question it, ask the questions, and yes, that's what we say.
Yeah, there's some great questions, Martyn. Thanks for sharing those. And for everybody who's on the call and all registered and all members, I've got a list of those questions, and I'll share that post this session on an email for you all as well.
Yeah, sure, that's great. Yeah, so we're happy to answer the question now, and we'll provide all that other additional information.
Absolutely. Annie, did you want to come off mute? You're more than welcome to talk to Hugh and Martyn direct. We've got a nice little nice size group today, so it just allows that sort of one-on-one conversation too. If you wanted to pop off mute, yeah, you could have a chat to the gentleman directly. And for the rest of the people on the call, just Annie's question is talking about her landlord insurance renewal that she's just done through her broker, not Gallagher, but through her broker she works with. Yeah, have a chat to the gentleman, Annie.
Okay, yeah, look, thanks guys for your insights, it's great. I have just renewed my landlord's insurance. I run an accommodation property in Robe down at the beach, and I was fascinated this year because they always send me 3 quotes, and one of them was $1,000 less than the other 2. And the others just varied, around about $100. Now, I've never actually had a claim, and I'm quite poor after a few months of nothing. Mind you, we're booming at the moment. And so I did opt for the lower one. Now, the reason I use a broker is I don't have time for fine print, yours or anybody else's. And that's what I expect the broker to do before I'm sent these things. Now, in haste, I just paid it, and, that's another bill done.
Oh, absolutely.
Where am I sitting in this? I mean, obviously I did look through all 3 policies, and to all intents and purposes, they look to be pretty much the same. I mean, apart from, ever tried to compare your health insurance? Yeah.
Yeah, Annie, I think you raise a really good question there. And like I said, we work with our brokers, as Martyn reflected, it's an advice-based model. And, like your accountant, you have these relationships in place to help you because you're busy running your business on many, many different levels. Martyn and Hugh, you might be able to clarify, but perhaps the broker should have given a breakdown to why there was such a vast difference in pricing.
Absolutely, and the legislation says that we have to act in the client's best interest. We also have to provide as to why we're recommending you change insurers. So, for instance, it might be, well, you're with Allianz, Annie, but however, we've got a new insurance policy with Blue Zebra Insurance, who have now been backed by security, and they're looking to get some market share in the landlord space, and they're providing full accidental damage cover, rent default, they're providing a lower excess option. Therefore, that's why we're recommending we move your insurance to XYZ, is because of lower premium, cheaper excess, better coverage. and then they provide that, then you pay the premium. Now, if something was to occur that was covered under the Allianz policy, but not covered under the Blue Zebra policy, then that broker would be found liable.
Oh, okay.
Yeah.
Right.
So, yeah. So by going through a broker, the broker has to comply with the Insurance Contracts Act and the Insurance Agents and Brokers Act. So, and that is acting in our client's best interest. And the Royal Commission, the Haynes Royal Commission, addressed all those matters, because people, other brokers, and over the history, a lot of agents were putting you with Allianz because they were paying 30% commission as opposed to 10% commission with QBE. So they're ruling out all of that practice that was really unethical, and people were recommending change of insurers purely because they're earning more money, which is incorrect. So as the disclosure, we have to disclose our commission and our broker fees and what we earn from that particular product.
Well,
Right. So perhaps
you're-
I really do need to go back and have a little bit of a closer look and ring my best friend Mari.
Yes. Yeah. So just ask the question and say, look, it's $1,000 different. What are the main differences between policy A and policy B? And look, we have situations where domestic insurance can change by the month. It's crazy, because they might say, we've suffered a lot of risks in that postcode, so the premiums go up. This area is performing quite well. We'll drop our premiums because we want to get some more market share in that particular postcode. So what you usually find is that insurers are very good at having a lot of data. So they'll go, oh, hang on, we've written too many policies in the postcode between 5001 and 5020. So they'll put all their premiums up so they don't take on any more risk in that area. So the insurers are quite smart in aggregating their risk and their exposures, and they'll adjust it accordingly. So they might have lost a fair bit of business in your particular area and think, right, well, we'll drop our price, we'll grab some market share, get some clients on board, and slowly increase it. So
it's absolutely your broker's job to lay out exactly why it is that they're recommending something. In the same way as if your accountant gives you bad tax advice and you either lose money or you end up in the soup legally, you'd be taking your accountant to task. The exact same pressure should be put on your insurance broker. You're paying them good money to provide a service for you.
Thank you, Hugh.
Thanks, gentlemen.
And Martyn, yes.
I hope that helped, Addie, and providing it's nice to be able to just have that open conversation, isn't it? Now we've
Very
also
much so.
got Marianne Kennedy, gentlemen. You're welcome, Annie. We've also got Marianne Kennedy. I know, Marianne, you haven't got your video on. You're more than welcome to come off of mute and have a chat, just like Annie did to the gentleman. But for the rest of the crowd, rest of our audience online today, Marianne Kennedy runs Taste of SA. She was a tour operator, and she sort of wants to have a chat about public liability insurance, which is, very important. Marianne, did you want to come off of mute? There you are. Hi, it's good to see you, Marianne.
Sorry. So obviously not much is happening as far as tours and things are concerned for me at the moment. It's been more international, but I was waiting for the broker to come back with a better price, but it's still $2,500, and I just don't know if that's competitive or what, because it's no business. It's no, how do you come up with $2,500 at the moment?
Yeah, well, there are several rating factors that come into consideration with your particular business, without going into the full particulars. But this is where we would spend the time with you and go right through and say, okay, tell me about your business, Mary. What do you do? What don't you do? What are your risks? What are your concerns? What keeps you up at night, et cetera, et cetera. So we build a profile of your business and what type of insurance would be best suited to yourselves. Now, I've got to say the insurer's response during COVID has been absolutely woeful. Clients needed the compensation and the help as it's happening, not, oh, we'll wait until renewal, we'll wait until renewal. So unfortunately, we had a lot of clients in your particular cases as well. But if we get it right in the first place and find out what are your pain points, what are the issues, then we can work through your particular business and then again seek alternative options from the market. So what most insurers are concerned about is what they call the run-off liability or the products exposure. So whilst you're not operating today, they're still covering you for the past activities of the last 5 or 10 years, because if a claim occurs today or comes out of the woodwork from 4 years ago, they're still liable to pay that claim.
So I've never had any claims, and they have assessed, but they said keep on your last policy, even though not cancel it, because even though you're not working, because we're going to have a better price with the next person. And then it ended up being like $100 less, but it's still $2,500. And I think
yeah. Well, we'd like to talk to you, Mary. So if you want to give us a call, we'd be more than happy to help you out. So
absolutely, and that's what I was thinking. I think, Marianne, it's just good to get some really good advice given your current situation of no operation, because you are largely an international market as well. But I'll connect you personally with Martyn off this call, and I'll do an introduction for you, Marianne. And then you can take that conversations further. Lovely.
Thanks so much.
And the thing is, Mary, if we go to the market and we find we get 4 or 5 quotes and you're paying what you're paying is competitive, well, then you know that you're not being overcharged or you're getting the right cover. But the old saying is, if you don't know, you don't know. So, and we're happy to help.
Yep, but
that's absolutely correct. You don't know if you don't know, and you guys are the experts in the field, and that's what we're here to serve our members in connecting you guys to the right trusted advice where you need to. As I said, Gallagher's are the insurance partner for TIC SA. And manage our we've done our due diligence and our approach, and they kindly manage our services and many of our clients in the industry as well. So is there any more questions from our audience today? I think that kind of wraps it up. Thanks, Martyn and Hugh. You guys have been so generous with your time and insight today. It's been wonderful that you can have some personal one-on-one conversations with Annie and Marianne too. Gallagher, like I said, insurance partner of SA, of the Tourism Industry Council of SA. I trust you've all who've tuned in have really gained some value out of this conversation today. We have recorded this conversation, so we will send this out and it will be available as a resource for our whole membership group cohort, and we will send this out to all our registered delegates as well with the fabulous banker questions Martyn provided on what you should be asking your brokers, and a connection to Hugh and Martyn as well. So that will all come out to you later on today. Lastly, today is our last In Conversation for the year. Wow, what a year it's been. The program was initially launched in response to the pandemic as a way to continue to support and stay connected and engage with our community. And to all our audience on today, we've just been really overwhelmed by the appreciation and how much you guys have valued these sessions we've delivered to you. I think our first dated back in April this year. And based on that, I'm pleased to say we're going to continue to bring these sessions throughout 2021. I know you guys have all loved connecting and talking and collaborating with the experts we deliver from the comfort of your own homes. And 2021, have a Merry Christmas, everybody, and look forward to seeing you all soon. Thank you, Hugh and Martyn, and thanks everybody who's on today's call.